Welcome to the Digital Assets Report. I'm Greg Greenberg, reporting live from the New York Stock Exchange, and I'm joined by Vincent Molinari. Welcome, Vince.
Good morning. Great to see you, Greg.
All right, so there's big changes here in the Digital Assets Report this week. Not only am I filling in for Jane King, but you have a new title as well. Why don't you explain?
Yeah, we're thrilled. TEMPLUM Inc. was approved by the regulators for the acquisition of Liquid M Capital. That is now TEMPLUM Markets. So I am the CEO of TEMPLUM Markets, effective immediately. So new title and furthering the mission of our digital asset initiative.
So for individual investors who are seeking out alternative trading systems, what should they be looking for in an ATS?
Yeah, and it's a great question, Greg. And we like to say all ATSs are not created equal. And when we look at the vast majority, probably close to 90% of the ATSs that are in existence in the United States today, they're for exchange-to-exchange connectivity, liquid stock execution. And there's probably 10%, maybe 6 to 8, that are focused on unregistered and private securities. So most of the issuances, if not all that we've seen so far are on digital assets, have been unregistered securities. So it's the ability, like ATSs that TEMPLUM Markets has, to execute on unregistered and private securities in a digitized format.
So let's talk about issuances. If I am looking to raise capital through an ICO, why would I choose TEMPLUM Markets? I mean, what benefits do you offer?
Well, I think there's lots, right? So I think it's the regulatory framework and the approval set. So again, not all broker-dealers or ATSs are created equal. So it's the permissioning or the approval set from FINRA to be able to issue private placements, and we in fact can issue those in electronic methodologies. And it's the licensing, right? So blue sky requirements. So many ATSs are just in 3, 5, 6, a half a dozen states, because you don't necessarily need state approval for the execution exchange to exchange. So we meet all blue sky requirements. We're listed and approved to do business in each of the states, all 50 states, plus Puerto Rico, US Virgin Islands, and the District of Columbia. So I think those are paramount so that there is true dissemination of offerings across the country with blue sky requirements.
Can we stay on this topic of offerings just a little bit further? Because
Sure.
Earlier this month we saw the Spotify listing right here on the exchange behind us, and they essentially just plopped that ticker up and it started trading. Seems like they cut a lot of the investment bank process out, cut a lot of the middlemen out. What does that mean going forward? Because we're seeing ICOs, we're seeing listings like Spotify. So looking ahead to what's going on in the brokerage industry, where do you see it proceeding?
I mean, big kudos for New York Stock Exchange. That is a wonderful move, right? So what we see, look at the Wall Street Journal's article last week, 2.4 trillion of unregistered securities issuances in the United States last year. So we're seeing more private entities because of the Jobs Act, general solicitation, changes to 12G, able to access capital like they were a public company early on and they're still private. So many unicorns and other large privates that have hundreds of millions of dollars of capital. So they don't need the traditional IPO to access the capital. What do they need? They need a listing in order to have access to liquidity. So great mechanism by the New York Stock Exchange to pick up listings. If I extend that slightly further, if I could, Greg, I think it's a prediction that I'd like to think is going to happen. We're going to see collaboration or synergies with ATSs that are trading private unregistered securities that align with exchanges for an on-ramp.
Well, we have actually heard from exchanges like Coinbase saying they're actually moving towards more regulation, and in March we actually heard the SEC put out a lot of pronouncements about regulation in the brokerage industry. So do you think that the exchanges, the crypto community, and the SEC are finally coming together at least a little bit?
I think it's the beginning of it, right? So the SEC has done a great job in giving more and more direction since the 21A report, the Dow report in July, and we've seen many investor bulletins, Chair Clayton's formal and informal remarks, op-eds in the Wall Street Journal. So I think this is another one of those watershed investor bulletins in March where trading platforms being reinforced should be an exchange or an exemption under the alternative trading system. So I think it's great. We applaud what Coinbase is doing and other applications for ATSs, because ultimately the more you have standardization, the more we can create better liquidity pools, better price discovery, and that was the genesis of ATSs back in 1998.
And issuance in the first quarter was over 4 billion. However, March was down from that February record. What's your expectation for issuance, new money raised in the second quarter? Still early.
Tough to handicap it quarter to quarter, but I think if we look at the trajectory over 2018, we think it's going to surpass again, right? As we look at this integration of security digital assets entering the framework. So we think that is going to eclipse by far what was done in 2017 as what was deemed to be utility tokens, and the trajectory over the next decade we think is paradigm shifting as access to capital and clear visibility to secondary liquidity enters the system for digitized securities on smart contracts.
And then finally, since this is tax week, the SEC views tokens as securities, but the IRS views crypto as property. Do these folks have to get on the same page?
I think there's going to be more of that, frankly, but I think the important point to point out is why did we see the IRS, for example, filing litigation as John Doe 1, 2, and I think 4 against Coinbase to get access to the trading records of crypto transactions, because there was a huge increase in volumes and a disconnect in tax receipts relative to those. So I think what we're going to see is this recognition that there has to be a reporting practice at places like Coinbase and others who are trading that equivalent to the 1099 that brokerage firms has for full disclosure and pricing, so that IRS and other organizations can track capital gains. And some even say, you know, with perhaps I think it was a $25 billion tax overhang, maybe that's one of the reasons why there's, or compounding some of the downward pressure on cryptocurrencies this quarter so far. So more to see, and we'll see how it all sorts out with the regulations, but I think getting closer and closer.
And we're going to keep watching it. Thanks for talking about it.
Pleasure. Thanks for having me.
And this is the Digital Assets Report. I'm Greg Greenberg, filling in for Jane King from the New York Stock Exchange. Thanks for watching.